O'clock on the 11th. Happy February 11th, everybody. If you're out there typing a wire, yes. If you can hear my voice, let me just get the chat updated, and we're ready to rock and roll. Say hello. Chat, chat, chat. Let's see who's in the house. All right. There we go. We had some watchers waiting. I love it. Let's see who's. All right, nice to see everybody. Ray, good morning. Chris, good morning. Don, good morning. Kevin in the house. Tom, what's up, man? RG, nice to see you. All right, happy Friday, everybody. Let's get started. Let's understand there is risk in trading. Let me bring up the risk disclaimer here. There's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. All right. If you're following me out there on social media, hopefully the easiest place to find me is right here, youtube.com/Chris Pulver. I'm streaming these Mondays and Friday live sessions on YouTube, on Facebook, on Twitter, on LinkedIn, and on Twitch. So if you've got any gamers out there, what's happening? Looking forward to playing some Fortnite later on tonight. But for my traders out there, here we are every Monday and Friday at 9 o'clock. And let's get to it. All right, happy Friday. Let's go. Let's get to the charts. Just taking a look at the headlines in the futures market this morning. We had a pretty volatile day yesterday. Here is the stock market. This is the S&P 500. Pretty fun swing. The market pretty much, wet its pants later in the day because it was a massive afternoon sell-off after filling some gaps. So we had gap higher, gap lower, and aggressive volatility yesterday. Long wick to the north. In fact, what we did is we gapped higher right here, gapped lower for Thursday's trading, ran all the way back up to revisit the highs at 457, and then flush back down for an afternoon close in the red. So we had our movers yesterday in the red. And again, you're continuing to see this like uncertainty, this volatility. The volatility index spiked up a little bit right here. So a big jump yesterday. And your Dow, what you are noticing this morning is things are barely above the close. So pre-market, we're a little bit higher by about 70 cents on the SPY. Pre-market, we are slightly higher by 42 cents on the Dow. And the Qs pre-market up about 60 cents. So it's going to be an interesting Friday. News-wise this morning, let's take a look on the Forex side, just Forex Factory calendar. Anything that is noticeable. So yesterday, the big news was the CPI print. And again, if you go digging, you're going to see that there's some pretty wonky numbers coming out from the Fed. Look. Inflation is running pretty darn hot. I found a nice little stat yesterday, I believe. Sent it to a buddy of mine. Inflation for the U.S., we are on, of developed nations, we're on the high side. We are showing U.S. at 7.5% global inflation. That's year over year percent. So we're talking about, we are higher than most of the Eurozone. Spain is at 6%. Mexico at 7.1, Poland, Russia 8.6, 8.7 respectively, Brazil 10.4, and then you're getting into the crisis countries, Turkey 48.7%, Argentina 50.9%, and Venezuela 472%. Ridiculous. Japan 0.8, Saudi Arabia 1.2, Switzerland 1.5, China 1.5. So, again, inflation is the hidden tax, but it's causing a problem. So right now you're seeing the Fed very sensitive to inflation data. And it came out hot yesterday, higher than expected. Again, you're seeing numbers at 7, 7.5. There's a weighted average, okay, that's very misleading because obviously other things are way more expensive than 7%. Gas, 50%. Energy, 15 to 20%. Used cars, rental cars, new cars, 15 to 20%. Groceries, probably 4 to 6% easily, right? When's the last time you saw a sale at a retail store? It's been a while, right? So look, we know it. And the Fed, you may have seen last night, floating around Twitter or maybe making some headlines. Actually, a student, Denise, if you're in the house, thanks for sending that what was it, Zero Hedge article, that there's potentially an emergency meeting today from the Fed to even raise rates prior to the March 16th Fed meeting. And so I want to take a quick look at that CME watch tool that we use in the Flex trading room. And we had a big shift in this week. It was like a 75%. Look at this. So, okay, I'm going to put this in perspective. If for those of you that don't know what this is, This is the CME Group watch tool on the Fed. What this means is this is the probability of what the Fed will be doing for its next meeting. So the next meeting for the Fed is March 16th. And literally yesterday during the Flex Trading Room at 8 o'clock Eastern Time, we're watching this, checking it out. It was 75% on the 25 basis points probability and 25% on the 0.50 basis points. Meaning that, the March rate hike is expected to be 25 basis points. And you can see that just in the last 24 hours, this has completely shifted. So now we have 2/3 expected to actually see the Fed come out swinging hotter and raising the rates by 0.50, right? So really the objective here is, are they trying to squash inflation a little bit? Yes, by raising rates. I mean, literally we're at 0%. So raising it half of 1% isn't a tremendous deal, but you can see what the market has been reacting to. If the Fed's going to raise rates, tightening, scaling back, the market tends not to like that, right? However, it's a very interesting predicament because, the economy is kind of on the brink of, okay, so the growth is over, the party's over, things are, everything's been great for the last 3 years, everything's been, fantastic and artificially engineered the last 14 years, but the growth is over. So that's why we're seeing tech sell off so aggressively. That's why, my portfolio is now positioned to have some bargain shopping tech that I'm going to have to lower the cost basis on and hold for a while. But for the most part, I'm in financials, I'm in energy, and I'm in consumer staples. I'm going to more of a protective, defensive portfolio right now, trying to work some trades with options, lower my cost basis, make some income. This week's actually been a good week. So despite all the craziness and volatility, which again, it just was kind of felt yesterday intraday, we've had some great profits this week. Took profit on Google, took profit on OKTA, took profit on Snapchat, took profit on, well, actually, today we'll find out if Alcoa can stay above $59, which it should because it's trading at $70. But we still have some expirations today to talk about in class at 10 o'clock, right? But all in all, it's been good. We take little stabs, and we're making some nice income through the week. And, for the buy and hold, eventually we'll have something pay out. I'm in some nice bank stocks right now that I'm going to take a look at. But between Google, OKTA, and Snap alone, that was almost $12 of credit per contract this week, which is pretty nice. Okay, look at this. Yeah, you're absolutely welcome. John, you're totally welcome. Year to date, 1964 pips, 1,964 pips. Good trade, man. And we're not done yet. Let me see where I'm at for one of my accounts. Let me check. Let's see. Right here. Let me see where I'm at for the year. So far for the year, I am at pip-wise. Let's go to pips here. So pips for the year, 1,581 so far. So that's January's trading. I really haven't had, well, I've had some pips here for February, but I'm looking to see, well, I'm holding some positions right now that I've had some fluctuation. Like yesterday to today, we had some volatility in the currency market. Here's your currency strength chart from yesterday. You're going to see some pretty wild swings. We had the Aussie, dollar very strong to very weak. Aussie very strong to very weak. Dollar goes from weak to strong. Yen goes from weak to strong. Swiss goes from weak to strong. So that transition from, if you took that kind of photographic memory shot of the SPY, it was gap lower, fill the gap to the upside, and then flush down and close bearish for the day, right? And so when it flushed up, that's all your risk on trading right here. When it flushed down and closed bearish on the day, that's all of your risk off safe haven currency pairs rallying back up to baseline. So really it was just a wild volatility day, which we've seen certainly way more volatility intraday, but it was a pretty clear cut, like risk on morning, risk off afternoon, and here we are for Friday. And I'm sure for a lot of traders out there, when they see that volatility, like, I just want Friday to be over with. But like I said, it's been good. I want to see what happens this week. Let's see if our pound and Zealand trade starts to run lower. I'm trying to hold that thing for another 300 pips to the downside. Okay, good stuff. David, following your rooms year to date, 1,232 pips. Excellent. Love to hear it. Yep, good stuff. Good morning, Denise. I gave you a shout out. Thanks for that Zero Hedge article. Okay, let's take a look at everything. So we're good. Pre-market, everything's a little bit up on the stock market, the indices. Volatility, let me take a look at the VIXI. Is it higher or lower? So we're sitting pre-market slightly down in the VIXI, which is fine. One trade that should be closing up for profit this week for me is going to be the SVXY. We're looking at opening at 56.96. And I have the 53 by 52. I've got a 56 by 55.50. And I'm going to keep watching this one. In fact, I wouldn't be terribly offended if I did take ownership of some SVXY shares. Now, of course, I mean, taking like 100 shares of this is fine, but I would certainly be looking for... I'm still long the VIXY. If somehow volatility goes up, I'm still long the VIXY. I can hedge with the XVXY. And this, I just, experience-wise, we were talking a lot in the Equities On Demand trading room about trading credit spreads. The spreads are widening quite a bit. And I am going to continue to watch and monitor, credit markets, look at the bond markets, the 10-year note, the TNX. Trading at 2.00. Oh my gosh. Okay, it's getting up there. So there is no denying that we're seeing some sneakiness here in the rates and the yields. And this is what the market is pricing in as they know the rates are coming. Let's see if this translates. We're going to see a big flip in the dollar yesterday. The dollar was weaker. The euro dollar retested highs at, 14.55, literally the same highs, and then got rejected. We're back down to 13.94. My euro Swiss retested highs and then got rejected back to 105.56. The Swiss yen, a little bit of a rejection. I'm hoping that will flush down towards 1800. Aussie yen left a long wick to the north. CAD yen, same thing, long wick to the north. So we'll see what type of trading we get today. But dollar index, let's take a look. Okay. Oh, look at that. David he ups himself. Monthly 1,236 and year to date 3,556 pips. Excellent. Excellent. Good work, man. All right, so here's the dollar index, and this is the wildness I was talking about yesterday. Look at just the long wick to the south. So very long wick to the south, a lot of volatility. Still, we've talked about this in the Flex Trader Room, a lot of indecision on the dollar index. And it's going to probably continue to be this way. The market may just have to look at, okay, we have some noise around this area, right? A lot of noise, in fact. And at first, we had this December volatility that I was watching. Let me just redraw this. So I was looking at this high, I was looking at this low, and during the holidays, we were looking to see, do we have a clean break, a retest, and a go down to the yearly pivot? No, we had a fake out instead. So then, not only a fake out to the downside, but also we had a little spike to the upside at channel resistance. And so the market is just, dancing around here on the dollar index. It's not quite sure where it's going to go. I really think that it's going to be difficult to see the dollar index. This is just my opinion, but I think the dollar index going down here is probably not going to happen. That's just my thoughts. And the reason why is if we're sitting in a fourth wave of this dollar index, typically the fourth wave is not a very cooperative corrective wave. So if this is wave 1, this is wave 2, this is wave 3, wave 4 could be nothing but sideways, right? And we might have a 1, 2, 3 part of this fourth wave correction, and then we're starting to see the dollar get stronger. So I am prepared for that move. And as traders know, the last 3 or 4 months, I've been hedged on the dollar Swiss and euro dollar. So if this goes up, hopefully my dollar Swiss is running to the targets of 9,600, 9,650 like we planned for. If this goes up, I know that my euro dollar may flush back down to 1.10. We might have some really great trades on the Aussie dollar, New Zealand dollar, dollar CAD going north. Oil's obviously been a big story this year. It's up above $90. OPEC is, talking about increasing supply. The U.S. has already introduced, what was it? It's like they busted into their oil sellers and their reserves to increase oil supply to try to, that is like by far our biggest inflation number is just gas prices. And again, so does it get bad enough where people stop driving? I don't know, maybe. But I don't know, it's very real, right? And then oil prices were sitting at 90.91. We're getting these very shallow retracements, very shallow wicks. I think oil is still going to continue to grind higher. Obviously, the potential escalated crisis going on at the Russia-Ukraine border is making things a little bit more difficult to bring oil back down. So, that's a whole issue in and of itself. Whether that happens or not, whether we have a conflict or not, I hope for the sake of, humanity we don't. But we don't know what this is going to look like. So we're going to have to navigate a lot of stuff. in addition to the Fed raising rates, in addition to a growth cycle that's finally coming in addition to, an election year for midterms in the U.S. and geopolitical tensions in China, right? All sorts of fun stuff to trade this year, but we're doing it anyway. Okay. All right, good stuff. So we're watching oil, we're watching the dollar index, we're watching gold and silver. I still like long on gold and silver. I just think silver is a better setup technically. We've talked about this. It did retrace a little bit. In order to get a better gauge on gold and silver, watch the dollar, right? You can see that the dollar's been sideways. You're going to see that gold and silver has been sideways. Crypto sold off a little bit yesterday with that volatility in the US dollar, but we're bouncing back 43.5 or 43.6 now on Bitcoin. I'm going to set a chart alarm here at the highs at 46. I'm wondering if we are going to use, we just broke this recent high, a little pattern on the right-hand side of the trend line. I was looking at levels around $40,000 or so. If we have a pullback towards $40,000 to $41,000, looking at that as more opportunities to add to some Bitcoin. Again, adding small, because if it comes back down to 30K, I'm certainly going to add more down there. Okay? So I will be watching, just in case we have Bitcoin off of the, looks like we have a potential large range. I know my chart's a little wild and crazy here, but there is a resistance level, connect the lows for a support level. And if we are forming a bullish pattern down here, that does provide some technical promise that cryptos in general can start working their way back up. All right, so lots of chart alarms set, pivots to the upside on Bitcoin that can all be found. And if we form this bullish pattern, any dips I'm looking to buy. I'll probably add more. If we come down and tap 40,000, I'll probably add some more on Bitcoin. I'll revisit 35, I'll revisit 30, and I'll just kind of continue to, add little bits and accumulate, and just kind of taking some of my profits elsewhere. Profits in stocks, I'm going to throw a little bit more in crypto. Profits in Forex, I'm throwing a little bit more in crypto. So it's not really increasing my overall exposure that much. A couple more percent allocated to Bitcoin. But, if I can build it off the lows at 30, I'm pretty happy doing that, right? And my break even is still like below 30,000, which I'm happy to have. But it's increasing my cost basis a little bit, but I think buying off the lows is making some sense. Okay. All right. What else? You want to get into some stocks? You want to get into some cryptos, other cryptos? You want to get into some Forex pairs? Let me know in the chat for everyone tuning in. We can take a look. Pairs that I'm watching really closely. Euro Swiss yesterday, we're still just shy of the yearly pivot, which happens to be right here at 106.20. There's also a big pocket at 106.30 to 106.40, past support at 106.90. We have, if I'm not mistaken, a weekly harmonic pattern that comes together at 108.50. So all I'm really looking for and trying to stay patient on is a 1, 2, 3 on the Euro Swiss. And whether that takes us up into this past support, takes us up into 107.50 to 108.50. Those are going to be my profit windows on holding this thing long. Okay, euro dollar, sure, we can take a look at that one. Euro dollar. So what I'd love to see for right now is, because we had that ECB pop and the market quickly tried to price in a rate hike, and again, this isn't happening anytime soon from the ECB, but the markets have quickly repositioned for a potential rate hike in the euro up to 20 to 40 basis points by possibly September of this year. So we knew this going into 2022. We had this early on in the sessions, like kind of my yearly outlook is going to be, Fed watch. It's going to be central banks. It's going to be follow the leader. It's going to be who's raising rates. And it just seems like every central bank is starting to sprinkle in some narrative of talking about raising rates. Then the next question is, are they actually going to do it? And so the ECB is talking about it. The market is anticipating it, but will they actually do it? And this could be, 5 to 6 months away. So potentially, this was also a very crowded short trade. A lot of retail crowders were long the dollar, short the euro dollar, and this could be a nice little squeeze against them to flush them back out and neutralize. And if they remain, heavy to the downside, this is a pair that can still move up, right? And one other correlation to keep an eye out on is the dollar versus the stock market, okay? If we're going to see the stock market maintain bullishness, the dollar is going to have to get weaker. I think that is why we have so much indecision right now in both of them. The stock market, after its January flush, is now sitting in the middle. The dollar index, after a holiday, sideways move, fakes out, it's sitting in the middle. At some point, these are going to correlate. At some point, either stocks flush back lower and the dollar gets stronger, okay, or stocks find a way to try to regain those highs from earlier this year or late last year, and the dollar gets weaker because of it, all right? So the dollar index is going to influence where this euro dollar goes. If the dollar index drops, this should make its way back up. We do have some excellent alignments here. 1640 to 1700, that's my profit window. I am personally long on the euro dollar right now. And I've been holding, some of these levels are on 1500. I started to build a pretty decent sized position around 1300 and 1250. But I would love to see this get back up into this little profit window for me to take some trades off and be done with it. And that's also harmonic level plus our pivot. And that would just be a 1, 2, 3. With a little corrective wave on the euro dollar, I'd be pretty happy with that overall. Okay. Let's see here. Suggest a reasonable allocation position for Forex, stocks, cryptos. I actually have a video on that, Gary. There is a video that I have on that. What is it called? I think it's called From 100K to a Million. And I talk about the allocation of what I would do with $100,000 over the next, 5 or 10 years. My allocation. And okay, so that is a 75 stocks options, 50 stocks options, 25 Forex, 25 crypto. And truth, like full transparency, for me, it's more like 45, 45, 10. 45 stocks options, 45 Forex, and 10 crypto. That's pretty much where I'm at right now for my actual funds. But for that, if I had 100K and someone's like, what would you do with this to grow it? That's how I would do it. I have in that video, I outline it. It was a 50, 25, 25 split. Okay. And the 25 crypto is easy. You buy Bitcoin. For the most part, you buy Bitcoin, Ethereum, and you just walk away for the next 5 or 10 years. It's not that hard. But that allocation could be worth literally double, triple, quadruple your portfolio. It could be worth way more than that. Forex is the trader's market. Forex is the ability to trade bull market, bear market, up, down, sideways, no market. You can scalp, you can swing trade, you can position trade, you can be bullish or bearish really easily. Stock market, you're dealing with human emotions, you're dealing with sentiment, you're dealing with the rising tide, the low sinking tide, right? I mean, there's a lot of sentiment that goes into the stock market. Now, there is an inherent bullish sentiment, but we can see how quickly that deteriorates when everyone's scared and uncertain, So at the end of the day, like those 3 asset classes, you're trading Forex. I think this is a year that you're going to have to trade stocks and options. I think the simple approach of I'll dollar cost average, well, that's worked when we have growth, and we've seen 14 years of it. But I think this is a year that you're not going to get a lot of growth. I think this is a year you're going to get a lot of sideways movement. You're going to get a lot of choppiness, and it's best to know how to trade options. You can lower your cost basis. A couple of strategies to lower your cost basis, take more assignment, buy cheaper, So trade this year. This is going to be a trader's year. I keep saying that, but it's true. Okay. All right. Good stuff. But yeah, check that video out, Gary. It's on my channel. And I just updated some of the layout of my channel as well. Like I put in my Trading 101 education playlist, my past live sessions, any trending topics, any shorts. I just labeled them all. So when you go to the homepage, you can see that and feel free to dive in. There's a bunch of videos. I think I have like close to 200 videos now. Okay. All right, let's take a few more requests. I see Pound of Zealand. Sure, Pound of Zealand, we are currently short. I like this trade quite a bit. I'm still profitable on Pound of Zealand. My current break even, I think I'm in. My break even should be above 2.04. My break even is 2.0408. Here is my platform right here. So small position in, tested on the side, tested on these equal highs. We're on the right-hand side of the trend line. What I'm looking for is some follow through. If we have price breaking back down, breaking here, retesting the backside of the trend line, looking for price to head a little bit lower. Okay, this blue area is, I'm looking at 2.0068, which is a past resistance high that I'll show you in just a second on the higher time frame. And then we have a nice weekly pocket that I've identified with this blue box. So anything below this 2.0068 into this, 2.00 round number target, that's going to be my profit level on the Pound New Zealand. And it should not be a terribly difficult trade. We've had overbought conditions for the last several weeks. We've had a 13-week run to the upside. I think if this forms a nice little high for us, pulls back to past resistance becoming support right here. Past resistance that I just highlighted, that's future support. So I think we have high, low, lower, high, lower, low. And that right there is a spot I can take some profit. If it flushes a little bit lower than that and balances, great. I'll take some profit in this blue box. Okay, but I'm still looking for another probably 300 pips or so to the downside on that pound New Zealand. Okay, good stuff. All right, that's pound New Zealand. New Zealand CAD, Swiss Yen. I see those requests, sure. Swiss Yen, 125.08. I'm going to set a chart alarm here at 127. I do have a pending sell at 127.05. Let me double check that entry. So 127 chart alarm, Swiss Yen, pending sell is 127.05. And that expiration's out to the end of March. So I still have that trade valid and still pending. What I'm looking for on this currency is we have this. This is my major level right here. We have this really nice pocket inefficiency. We also have a yearly pivot with support. So if this is high, low, lower high, lower low, excellent. Then we can start looking at this thing turning the corner. You know, any pullbacks I'm looking to sell, flush it back down, find these pockets, find this low around 118. All right. If it comes back up to the highs and hits this high again, I'm going to sell it and look for the exact same thing. High to low, break a low, form a pattern, start working its way back down. My target is still to come back into this pocket zone, these inefficiencies, and this low around 118. But you notice here that a little bit of trend line confirmation on the Swiss Yen will help me, you know, confirm that I can add more to this winning direction. So once I get more evidence that we're going bearish and we're on the right-hand side of the trend line, I'm going to start stacking some orders to the downside and target this pocket area, target this low, and build that position up for a nice profit. Okay, good stuff. All right, New Zealand CAD. New Zealand CAD, Aussie CAD. Personally, I'm long on both. New Zealand CAD's looking good. I like it. I'm long in this one. I'm trying to take this back up towards 8,900, which is just shy. Actually, it's just above this yearly pivot. So to be on the conservative side, I would look at this high right here, which is around 87.50, and the yearly pivot, which is around 88.50. So because we had such an aggressive flush lower, the pattern that I'm going to be looking for is a 1, 2, 3. I'm looking for some type of cup and handle move, some type of reversal pattern. If it ends up going up a little bit and then coming back down, then we can look for a bullish pattern to emerge. But anything on the right-hand side of this larger trend line, this potential falling wedge, would be where I'm looking for this New Zealand CAD to go up. I also think that oil is close, not there yet. I think oil can still go to $100 or higher, but oil is close enough to, you know, on a currency pair like New Zealand CAD that's not very volatile, the currency pairs like Aussie CAD as well, I don't mind looking at building a position and starting to see, okay, if we had a high to low, lower high to lower low, typically we have some symmetry there where even if we have a brief pullback and it flushes down again, I'm going to buy more New Zealand CAD and then take it back up to the midpoint. This is a currency pair that is very, equilibrium oriented, which is, to me, technically it's easier to trade. Okay? There's still risk. There's still drawdown. Trade small, build your position, stuff like that. But I tend to like this one because it finds pockets, it finds pivots. It's pretty efficient. But I'm long on it right now. All right, Swiss Yen, we're good. New Zealand CAD, we're good. Pound New Zealand, you're short. Yes, this thing is slow. Don't worry. I think it'll tip the scales and go in your favor. I said, you said last week, Nimmer, that you were break even at like 201. Yeah, 201.17. Like I said, my conservative levels are 2.0060, but I think we can get down to 1.98 pretty easily. I think that's really where I'd be pretty happy taking profit at 1.98. Yep, good stuff. All right, currently short on euro dollar. Yeah, Daniel, I'm not sure, man. If you're short on euro dollar, that's fine. If you're short, it depends on do you have a stop loss? If you're short euro dollar, are you building a position on it? If you're short euro dollar, are you building a position to say, okay, I'm short euro dollar here. Are you willing to stay short up into 1600? Are you willing to stay short into 1700? Because if it was position 1, position 2, I think that absolutely has a probability of going south. But if you're short now with the stop loss just above, I can't promise that's the top. Can't promise tops and bottoms. That's the hardest thing in the market to do. So, if you're willing to build, then there's room. If you're willing to say, like, it's got to be short and you're in profit right now, eliminate risk and be done with it. If it goes your way, great. Ride those profits. But maybe go to +5, +10 and let it run. Like yesterday, we were in the Aussie Yen, right? We took that little market trade in the Aussie Yen this week in the flex room, and we were up 30, 40 pips. put a stop loss at +3, got knocked out at +3. If it ran our way, you know, you could look back and say, oh, I should have grabbed my 30, 40 pips. Well, I mean, we were going after like 200 pips. So, you know, +3 is better than a loss. Right? All right, good stuff. New Zealand Swiss, sure, New Zealand Swiss. Still just need to see it break this trend line. So the good thing is we're back down into this spot here. We found this pocket. We found this missed yearly pivot or very close to it. So I'm looking for this to start breaking this trend line here. We have an excellent spot on the New Zealand Swiss. If you write it down, 63.50. 63.50 to 6,400 is a beautiful little pocket here on the daily time frame, plus a yearly pivot at 63.90. So I am looking to trade small and buy the New Zealand Swiss and looking to take it back up into that yearly pivot. All right, so a little bit more confirmation goes a long way. A potential falling wedge goes a long way. I want to see some bullish patterns starting to emerge, and I'll continue to build my New Zealand Swiss long a little bit. Okay, good stuff on that one, yes. Tron's asking Aussie Yen. Okay, a lot of Forex traders in here today. No stocks today. Anybody with expirations? Let me take a look at my top weekly picks. So top weekly picks, we got a couple of winners. Bank of America just closed out recently. So pound CAD we made some pips on. Dollar yen we made some pips on. We've had some credit spreads that paid really nicely. Made a nice credit there on the SPY straddle. Rocket, I'm going to hold that one for as long as I need to make probably $7 or $8 a share. BAC, this one was $4.70 a share. I closed it out at 50 bucks. Happy. I mean, that was great. We took a nice little credit spread, lowered our cost basis, didn't even have to cover it. Just got out of 50 bucks when it hit, grabbed 470 out of that. SVXY is going to be profitable by the 25th. You can probably close it now if you want to, but that strike price is nice and low. Pound of Zealand is active. If you're in at 2.0364, this is active and in profit. Looking good. We're going to take this down for probably 300 to 400 pips. And then Twitter, this expiration is next Friday, but 37 by 36. I didn't cash in a long put on Twitter yet. We have earnings that were positive. Twitter's trading up in the high 30s yesterday. So that one still, I'd take a stab at it, and I like it. So we're going to have some nice profits rolling in on these top weekly picks. That again, this is all for my newsletter at pulverreport.com if you want to get some picks and trade with me. All right, let's go back to the charts here. I was on Aussie Yen. So Aussie Yen, what is this thing trying to do? Well, I think Aussie Yen is trying to do something like this. We have some higher lows. We have some equal highs. Again, there's a pretty strong correlation between the Aussie Yen and the stock market. So if the Aussie Yen continues to show indecision like so, guess what? You're probably staring at a stock market like the S&P 500 that's doing the same thing. Okay? So unless the S&P is going to break higher highs and have new historical highs, I think we are just going to see this is resistance, this is support, and I'm looking to trade this, you know, essentially right now back down. I was short over here. I didn't take any profit. This is a small trade. I'm going to be short up here at the highs around 8,600. So trade one, trade two. I'm just trading kind of the structure and the range and the indecision on the Aussie Yen right now. There is, you know, you could see that we could go lower, but I just don't see really a ton of evidence outside of we have support here, we have resistance here. If this comes back down to support around 79.50 to 80, round number, I'll take profit. My current break even on the Aussie Yen, let me find it. It's probably around like 83 and change. Let me find it here. Aussie Yen break even is 83 or 82.80. 82.80 is my break even on the Aussie Yen. Okay. Right. Euro New Zealand, Loxley, sure, take a look at that one. Euro New Zealand 1.7060. So I don't have a trade running on this one right now. We were long. When this flushed down, we were long here to this pocket. We got long on an indecision breakout at 68.50. We took that up towards 71. I took profit. I know some traders were short the Euro New Zealand this week going after the weekly pivot. I did not trade the Euro New Zealand. Okay, on the bigger time frames, what I'm seeing is just a larger range. Okay, I mean, if you look at this and you look left on your chart, you've got lots of resistance back here around 1.8, and you have lots of support down here around 1.6. So we're kind of stuck in the middle. Now, is this a 1, 2, 3, 4, 5? Possible. I could see some legs up on the Euro New Zealand, but what I want to make sure that we trade is if this let's say we have a nice clean trend line break. If we have a counter trend line break and we start looking to build, put a stop loss lower, maybe look for some support around 1.70. That's a nice round number. This past resistance becomes support as well. So if we hold these current levels, then I would look for more upside, and we have a yearly pivot plus all of our levels back here. Now, I will say this. If we're going to hit 1.79 or 1.80, that is going to be a risk-off environment. All right? So that means stock market's probably going lower. Aussie and New Zealand as commodity-based pairs and risk-on pairs are going lower, and the euro as a safe haven and a central bank that potentially is raising rates in September is getting stronger. So, like I said, currently I'm not in the Euro New Zealand, but if I zoom in to price, is there anything that I could do now? Well, I'm just going to look at this. I think if we have a trend line break, I'm interested in revisiting this for a long. What I'd kind of like to see price do is come back down. Let's find this monthly pivot right there. Let's get close to it and look for some confirmation on the right-hand side of the trend line to trade long. Stop area below that U-turn, and then go after the high, go after higher highs, go after that yearly pivot that was missed at 1.78, 1.79. Okay, so it could be a pretty nice risk-reward setup, but I want to see it come down, and let's find 1.70 or a base here around like 69.50. Okay. All right, good stuff. New Zealand Swiss currently in profit 50 pips, hold until 63.80. Okay, I like it. I like that a lot, actually, Luke. That 63.50 window is awesome. PLTR, sure, we can look at, is that Palantir? Defensive technology, right? Cybersecurity, package software, 1316. So what I want to know is, where did Kathy Wood buy this thing? That's what I want to know. So we're back here to, $10. Look, it's not a bad spot to take a stab at it. Let me see if I can get, let me get a little fundamental analysis going here. Yep. So, yeah, let me take a look here. So, PLTR. So we have a financially healthy company. Not a huge history to it. Unprofitable for the next 3 years. Doesn't sound great. What's their debt level? What's their cash flow? If this is in tech, I mean, look, I think this. If you like the stock long term and it's a bargain, I think it's worth taking a stab at it. I'd take 1% risk on Palantir. It's like my 1% would literally be spaced out to 0. My 1% risk, if this goes down, I'll risk 1% for this thing to go bankrupt. And if it goes up, we're talking about 1% that turns into what? Even if it gets back to the yearly pivot, from current price to the yearly pivot, that is a 95% rally. If we get back to the crazy highs of 2021, that's a 200% rally. So, if tech just gets some love, we're going to see 30, 40, 50% jumps in stock price. I mean, that's kind of the amazing beauty. It's like, I can take a 1% risk in my portfolio. This thing has to go bankrupt or to 0. But the upside is, I mean, we would have my 1% risk is here, right? If it goes to 0, that's my 1% risk. Okay? Now take that and compare it. Let me put a box here. And this is actually for a lot of tech stocks right now. So this is my potential risk right here. Okay? So could I take a 1% risk and look at a reward of that? Sure. So there's my 1% gain. Right? If that's what I'm willing to risk. Now, probability-wise, do we have some stability here and historical evidence to suggest that $10 should be massive support? Sure. Can you use options to lower your costs even more? Yes. Could you buy this at $13.50 and watch the stock price go up to $26 and that's 100%? Yes. Right? If it goes up to the highs, that's 200+%. So, I mean, to me, it's a calculated risk. But I do like it. I haven't looked at Palantir at all. I know that it's on one of the ETFs for ARK, if I'm not mistaken. I'm just not sure where the break even is for Kathy Wood. I don't really care. But I would do a little bit more digging on this. What makes this great? Are there government contracts? Are there things that are exclusive? Who owns it? Are we looking at BlackRock? We're looking at Vanguard. We're looking at major plays institutionally. It actually shows here it's slightly overvalued. Let me see who owns this. So we have Future Growth, Do they have future growth but with lots of debt? I think I have FinViz already up and running. And if I'm taking this much time in every stock, I'm obviously not going to get to all of them. But let's take a look. PLTR. So we have some cash. We have no debt. That's good. We have growth future. That looks great. I mean, I like it. I think I'm actually going to look at this one for a potential credit spread. Do we have earnings coming up anytime soon? Let's find out. All right, let's go PLTR. If there's any earnings coming up, February 17th, ka-ching. Let's take a look at some options then. All right. Hey, cool, thanks. I'm going to take a trade today. All right, so while I get logged into that platform, just give me a moment. And I'm going to throw on a little credit spread for Palantir. And it might be one where, you know, I'll put it out past earnings. So if earnings are great, easy credit spread. If it goes against me, I'll use the long put to lower my cost. Okay, yep, trying to look at dollar Swiss as well. All right, so let me get into PL. Hopefully the spreads are decent. Hopefully they're weekly options. That I'll discover here in just a minute. Everybody can see my screen. This is my broker platform. So PLTR. And that earnings play is a pre-market on the 17th, which is going to be next Thursday, I believe. Next Thursday. So we'd have all day Thursday, all day Friday to manage if we did an 18th expiration, or we could go out the extra week to the 25th. Give ourselves a little bit more time to manage that long put if we're interested. So I'm going to look at a credit spread on PLTR. If I do it out to the 18th, I could do the 14 by 13.50 and probably grab, perfect, 25, 26, 27 cents. Wall Street's open right now, so this trade should fill. And I'm going to do, let's see, if I get assigned 2 contracts on this one. See if I can grab, if they'll fill me at 20, I'll get 28 cents if I get filled. That'd be pretty excellent. Let me get 28 cents. So I'll do 2 contracts, 28 cents limit credit, the 14 by 13.50. Now I could go to the 18th. Let me check something really quickly. The 18th gives me 2 days to manage this trade with my long put. If I go to the 25th, it's probably going to pay a little bit less, but that gives me more time to manage a long put if price flushes aggressively. We will find out. So let's see. I don't mind the 18th. Try to grab the extra, penny if I can in credit. Still do contracts. Let's see if this fills. Review order and place. So did that get filled? Survey says still pending. Order status. So pending at 28. Let me see if I can get this thing filled at 27. That should take it. Yep. Okay, so it got taken in at 27. Perfect. All right, so I'm in. And sorry I didn't do all the other charts you're looking at, but I found one that I wanted to trade. So let's go. Let me get my break-even spreadsheet up here. And that is in. I'm going to get in for Interactive Brokers as well, but I'll do that once we wrap up the session. So I've got a little break-even here. PL, TR. I've got to add this in for one of my tickers. Alphabetical order, PLTR right here. And then we'll take a look at the other ones. I won't dive in, and probably not going to trade all of them. But I do like it. And honestly, from just kind of not paying attention to it, I know it's been in some trouble. I know that Kathy Woods talked about kind of doubling down and stuff on that. But anyway, I mean, ARK is in some trouble. They've their ETF shares have gone terribly wrong. But again, it's mostly disruptive tech, which is getting crushed right now. So, but I do like this trade, and we're down to those $10 support levels or close to it. So this is a 218 expiration, doing 200 shares. I got filled at 27 cents, and that credit spread is open. What I'll probably end up doing is looking at a long put, anything that gets my stock price below $10. So I did the 14 by 13.50 on that trade, which means if I can cash in a long put at 350 or greater, then I can grab some profit there and lower my cost basis and try to follow the stock price if it drops through earnings. If earnings is positive, price gets above 14 bucks, I just make, there's a quick 50 bucks. Easy peasy. All right, so let's take a look at those other ones. So we have Pinterest. which I am in as well. I've lowered my cost on Pinterest down to $43. All right, considering I was in at friggin' $55, I'm pretty happy that now I'm down to like 41 bucks or $43. So again, same thing. How low do we go on Pinterest? I mean, could we drop all the way down to, $12? I don't know. Maybe, right? But what I'm looking at on the chart is we came down to fill this gap. If we base here, we have a big earnings gap there and another big earnings gap here. All right. We also have this gap was filled with that volatility with the rumor that PayPal is interested in buying Pinterest. So I do think that even just equilibrium, if this is, and a lot of these patterns I've talked about in the flex room, X, A, B, C, D, harmonic pattern, if this has the ability to trade back up to the yearly pivot and this harmonic merge, that puts us around 50 to 52.50. So I would love to see Pinterest get some love, get a little relief rally, get back into the mid 50s. And if I'm holding my break even in the 40s, I'll turn this thing for $10 a share or more. But I'm currently active right now. Like I have a credit spread out on Pinterest that I've used. I've closed out the long put. I know that I'm going to get assigned under $33. So if stock price stays where it is, I'm going to get assigned more. But my net break even right now is $41. It's right in between. I have two accounts. One has several accounts connected. Then my other Schwab account I just showed you. 43.53 and 40.87 are my two break evens that I need to monitor. But I think Pinterest, again, it's limited debt, has cash, has a giant user base. So, Snapchat is, I'm not saying it's similar, but Snapchat had a nice positive earnings report, and I actually closed out Snap for a nice profit. So if we're getting into Pinterest here, I like the current levels. I think there's room to get back to 50 bucks. Alibaba, this is another one, big one that's just been beaten down so badly. It's at 125. We've taken out, multiple years of support. But any type of retracement, there's a big gap right here. I would say that Alibaba should easily come back into the 160 area. We also have a yearly pivot right there. So 160, possibly 180, past support just above $200. But this one's pretty simple. I want to see price on the right-hand side of the trend line. If this keeps going lower, we wipe away years and years of growth on this thing. It's like, do we just go back and rise from the ashes at under $100? Maybe. But levels I'm looking at to the upside, dollar cost average, lower your cost basis overall. And, would I hold Alibaba to get back to 320? No way. That could take years to get back to that high. So if I can have this thing, get in at 125, lower my cost into the 110, like 115, 110, and try to take this up to 140, 150, 160. Take the profit, get the cash, and then go apply it elsewhere if you're in Alibaba. But I'm looking at those levels. I think 160 is doable. Nice earnings gap or something right there that flushed it down. Yearly pivot around 165, right? Skills, yeah, this one's lacking skills right now. The skill to be bullish. But I'm in it. I've got a break even on skills. I've got it in here somewhere. I don't know. It's like it's like $7 or it's like $10. I don't know. 13.30. Fudge. So break even on skills for me is $13.37. I've got it uncovered. I've done my best to lower my cost. I currently have 600 shares of skills going right now. And, it does me no good to try to cover it right now without losing the stock at a loss. Which, again, there's a saying out there, once you dig yourself a hole, stop digging. But in an inherently bullish stock market, I'd rather, not keep exposing myself. I already have enough shares for right now. And does skills have the ability to come back up here to, $13? Sure. Would I be happy at break even on this one? Sure. Would I be happier with a, pop to the upside, pull back and a run, maybe from this high to a fresh IPO low, which is nuts. Again, this was a SPAC play, so SPACs have just been beat up so badly. But if we end up giving any signs of bullishness here, I'd look for a 1, 2, 3, see where that goes. Realistically, if I can grab $2 a share to freaking $7 a share, I would be ecstatic. And there's no reason for me to hold any longer than that. But since I've held it this far, I'm just going to ride this one out. And it's a low price. If you're in it for the first time, it's a bargain. It's a super active app. They bring in a ton of cash. It's gaming on your phone. It's mobile gaming. They're going into the digital realm a little bit, but obviously, I was buying this thing in the teens thinking we got strong support, and the SPAC play just got beat up even further. So, I'm upside down quite a bit. But like I said, I'll sit and wait. Hopefully there's a pop. I got alarm set, and I'll be monitoring this one in the portfolio, on the regular. 381, want to hold the 8? Yeah, perfect. I mean, if you got in, that's a bargain, man. I'm super happy that you got in so low. So absolutely, sit on this one. We have good structure right there. Past support right around $8. Great spot. Great spot. All right, good stuff. DXY, Steven, we talked about the dollar index. DXY, US dollar, very similar. I think we're dealing with a lot of indecision, and I think that the market is trying to figure out, where this is going. So if this is wave 1, wave 2, wave 3, I think we're in the process of a wave 4, and there's a wave 5 that's coming that's going to make the dollar stronger. I don't know how it gets there. I don't know if this is, the Fed has to come out and be super hawkish. The market's like, oh crap, we didn't price enough strength in the dollar. So if that's the case, then maybe the dollar gets stronger because the Fed is all of a sudden jumping the line and going 50 basis points in March and 50 basis points in May or September. And they start raising rates, not only 2 to 3 times this year, but they do it and skip the 25 basis points increment that the markets were expecting this year. So I think the dollar ends up getting stronger. I think, again, the dollar and the stock market will be inversely correlated, in my opinion. So if the dollar gets stronger, that doesn't mean good things for the stock market. So that is the one thing I'm questioning is like, what is the Fed trying to get out of this? The Fed is trying to do its best to save face, not crash the economy, not ruin elections, not be politically motivated, I guess, maybe. But they probably are. Jerome Powell's probably happy he's in a second term. But inflation's a big deal. So if the dollar is going to be the sacrificial lamb to a rising stock market, I can see the dollar getting weaker only because there's so much pressure to keep the stock market stable right now. And that is why everything is so tricky, because the stock market shouldn't be stable. We've had a 14-year bull market. It is long in the tooth. We deserve to have a correction. One flush out for 2 to 3 weeks is not a correction. I'm sorry. A crash in March 2020 is not a correction. It's not a recession that you can avoid and keep engineering your way out of. So it's going to be a really tricky year. But where are we at in the dollar index? I think this is a 4th wave, and I think the 5th wave is still to come. Right? Now, this could be way different. Like this could be low to high here. We could come all the way back down, find support of this channel, and have this long, drawn-out channel that still has an upward trajectory. But we just have like all this, nuanced trend trading or range trading. But I don't think that's the case. I think when we've seen this thing move, it moves up, it moves down, it moves up, it moves down. And I think we're still in the phase of trying to move up. But that means from higher levels, we have resistance and we move back down when it's all said and done. So we're just going to trade the big levels, trade the big areas. Okay. And on that note, I think we've used up enough time today. I've got class at 10 o'clock at the top of the hour for Equities on Demand. I appreciate everyone jumping in today on a Friday and checking out the session. Thumbs up, always appreciated for everyone watching. If we can get that people watching to thumbs up ratio nice and high, that helps the channel a lot, especially on these live sessions. And if you want to check out the channel itself, like I said, I did reorganize the playlists and the layout of the videos. So I'm putting in the Trading 101 series and any trending topics, any live sessions, past recordings. I'm putting all this out there. I'm not hiding anything. I'm not taking videos down. It's all there. So check it out, explore it, check out the videos, timeless education. I just, I want to help, as always. Okay, thanks for being with me today. Happy Friday. Enjoy the weekend. Let's see what today gives us. Let's hopefully grab some nice profits this week for stocks. It's been a interesting week. I didn't actually close up a lot of trades in Forex. I don't think I did, at least. Did I close up any trades this week? I did not. I'm still sitting on no closed positions in Forex this week. At least for my manual trades. I can check my robots and see if they took some profit, because they might have. But still. Stock's been fine. Cryptos have been appreciating, so I've got some crypto gains that I'm sitting on. Forex-wise, we'll see what happens today, but I'll just carry it over and keep sticking to the big picture. All right, cool beans, everybody. Thanks a lot. We'll be back at it on Monday, same time, same place, for the Pulver Report, 9 o'clock Eastern Time. Have a great weekend. Talk to you soon. Thanks, bye.